Sammy Gordon, how are you, mate?
Big Todd, I'm well, thank you, buddy. How you doing?
Man, good. It's time to talk interest rates.
Yes.
What are they doing? Right? Going up, going down. They've been doing a lot of up lately, but I wanted to start off with the question is, what are you actually seeing, or what would you need to see for them to drop? That's the thing that's on everyone's mind.
Yeah. So the big thing, I think, that is the reason why the RBA has actually been, you say they've been going up for a while, but we've actually been in a hold period now for a fair few months.
Actually, that's true. Yeah, fair enough.
So that's been pretty good to see. I think it was been 4 consecutive months in a row. But it's going to be interesting because the latest CPI print came out and we're looking it's a little shakier than I think we were all hoping for. So RBA's meeting next week. It's going to be interesting to see how they kind of play out, off the back of that and in that meeting as well. So yeah, man, sorry, what was the question?
The question is, what would you need to see for you to have, I suppose, that backing to go, nah, they're coming down.
Yeah, man, it is continually trending inflation. So at the moment, the only lever that the RBA has to pull to ease monetary spending or to speed up monetary spending is interest rates, right? That's the only hammer that they've got in this whole game. And so realistically, they need to see inflation coming back under control before they will bring them down. Now, if inflation starts running again, like there's a few worries around at the moment, there actually is the chance and the potential that we actually see another increase before we see them come down.
Let's jump to that then. The meeting next week.
Yes.
Inflation, it didn't look as good, this last report that was released. Now, what do you reckon the odds are of them actually going up then?
We're probably, like, I know before we did this conversation, you kind of sent me this title a week before the latest CPI print came out. So the idea of this app was actually when we think we're going to see them coming down.
Correct.
Now, this is just how closely this is linked to inflation at the moment and the fluctuation between it moving. I think we've got a higher chance of when they meet next week seeing them go up than we do see them going down. In terms of exactly how much, I probably would call it around about a 50-50. I don't think the RBA really wants to do another rate hike, but realistically, if they feel they need to pull this thing even further under control and constrict it even tighter, then yeah, there definitely is a potential and a possibility for it. I think the chance now of it coming back down, it's not going to be for a little bit now.
So for anyone that's maybe sitting on the fence thinking, I want to buy an investment property, but there's too much uncertainty around rates, what would you tell them? Because actually, I don't even want to follow up that because what would you tell them?
I would never sit on the sideline due to rates. Like if you can afford to get into the marketplace, you can find something that's like close enough to break even or push it into a positive cash flow position, or even if it was very, very close to it. If you can save enough for a deposit, you can save enough to afford something that's $1,000 or $2,000 a year negative. And like the likelihood of them doing much more is very slim. Like we've been on a huge run with interest rates, and they're now at a very, very high level. Even if they do go up, potentially, it's not going to be much that they do go up. And like, it's not like we're going to see another 12 months of rapid increases. It might be one more just to kind of, help abate the market and hold it back a little bit. Anyone sitting on the sidelines, I'd say it's time to buckle up and get into it. I honestly think it's being fearful and you're going to miss out on opportunity. I guarantee you in the next 12 months, I said this at the start of this year, I said at the start of last year, when interest rates first started their run, there will be markets that do 20 to 30% growth last year. And they did. I said at the start of this year, there will be markets that do 20 to 30% growth, which they did. It'll be the same for next year. There are always markets growing and performing regardless of what interest rates are doing. So don't get like sucked into the fear around interest rates. Just find something or find what it is that you can afford to buy, at what price point, at what yield level, and then go and target that. Still get into the market.
I kind of feel like rates for the RBA is kind of like the wooden spoon that your parents may or may not have held up. And it's like they've hit us for like the past 12 months. And now the past 4 months, they've just kind of stood there and gone, watch how much you're spending.
Why is the market still growing? I hit you enough.
But we might potentially get another little tap on the bottom from the RBA.
Yes.
We can make an interesting graphic out of that. But as far as this whole rates are going to be coming down 2024.
Yes.
Do you subscribe to that? Or do you think this is just a bit more pie in the sky hoping?
Look, I think it's an interesting conversation. It's so hard to call because 3-4 months ago, yes, I was quite adamant they were going to come down probably somewhere around about the middle of the year. Some people were talking early year. I think that was hopeful. And others were talking end of the year. And I was kind of sitting somewhere in the middle. I was thinking probably middle of the year. The big turn of events that's come around is how hard the federal government is pushing to bring in as much skilled labor as they can into this country right now. That is creating a housing shortage, like a serious housing crisis, because there's not enough to go around at the moment, in a sense or a way of explaining that. So the biggest issue for that is that's putting extra pressure on everything that there is in the marketplace. When I say the market, I just mean the Australian market in general, and that is housing is a huge part of that. That's more and more people out there buying things. Fuel's still at a high price. It's not like any of these things, food and groceries and all the rest of it, they went on a big spike during COVID. They haven't come back. Fuel was the same thing. It hasn't come back. Rents are running away, in pretty much everywhere because the vacancy rates are so tight right across the country. So, mate, I don't think it's going to be coming back as soon as a lot of people were really hopeful for. My kind of forecast on it now, especially with where the population's going, it literally will always boil down to the inflation with the RBA. That's their number. They need to get that back to that target band. They're always chasing at that 2 to 3%. I think when it comes back within it, that's when they'll all very close to it. Especially if the economy's going on a bit of a stall run, they might start clipping it. But that's their job. Their job is to get that back to that and then control monetary policy around that as well. It's up to the government to keep the economy going. It's not so much on the RBA. So it's a tricky line. It's a fine line. And I think if I had to hazard a guess, I would be saying late 23, potentially early 24. But I think, again, it's a long way out to forecast because you just don't know where that inflation level is going to run. If it rains in sooner, it could be sooner. But that's kind of my gut feel now.
So late 23, early 24 for a cut?
Yes, I think so. I think we've got 12 months.
It's late 23 now.
Late. Yes, the late 24, early 25. The year's gone too quick, mate. I don't realize where we are. But yes, I would say, I think we've got 12. We've got around about a 12-month window because we're still sitting reasonably high on inflation. We're also about to go into holiday season, which is a notorious time for inflation to blow out. It was where I thought it was a bit unfair earlier in the year. Like they gave us another 0.5% touch up after the Christmas because CPI was always going to come out inflated after the Christmas and holiday season. Everyone gets out and spends, right? It is what it is. I think walking into that again now, I think we're going to have another. I don't think we're going to get touched up off the back of it from a rates perspective, but I don't think it's going to get chopped down sooner. So my money, I may be wrong here, but my money and where I'm kind of forecasting is somewhere after the middle of next year. In that back end. And
just quickly, because it's a slice, we don't have as much time. I know that rates moving up and down doesn't exactly stop you from buying, or it doesn't make you go, nah, investing now is a bad idea. But how does it change things?
I think you just have to be more aware of your cash flows. So no more going out buying blue chip, $1 million, $300 a week rent, Toddy. No more of that sort of stuff, mate. Please,
I'll try. It's
please
an addiction.
Do. It's an addiction because you're going to jail for it, because you're going bankrupt. But yeah, mate, like that's the sort of thing. Like you need to assess where you are in your portfolio. Just put the correct deals in the portfolio that are going to serve the purpose that you need. So everyone is different. Everyone makes a different amount of money. Everyone has a different amount saved. Everyone needs a different result from each individual property that they buy. So just be really aware of where you are in your situation and what property you need next in the portfolio, and then pull the trigger on the correct deal. I never think you should stop buying if you've got the capacity to do it. And that means that the ability to hold something, if it was like a little bit behind at the moment, I would be, I would definitely still be buying because there is 100% opportunity out there. The way I always put it is let's say this year you could go out and you could buy a property and make 20 grand on the way in, right? And then $40,000 in capital. Let's say it's a 400 grand property. You just get 10% growth in the next 12 months, which is very, very achievable in my opinion in a lot of locations. If you were to do that and that property cost you $5 grand a year to hold it, are you going to say no to the $60,000 worth of equity uplift this year that you achieve for the sake of $5 grand? If you say yes, then maybe I will slap you. Like that's a silly response.
Yeah, I thought that was completely rhetorical. I wasn't even.
But what I'm saying is, like, if anyone goes, no, I wouldn't. You know what I mean? Like, of course you would. And I think this is the thing, man. Is like that scenario there. Like, if you put that into the equation, all right, a property might cost me $1,000, $2,000, $5,000 a year. But if I buy in the right location, that's going to give me my 10% growth, and I can make a little margin on the way in. It makes complete sense to buy that property.
So looking for next week, we're potentially going to see a rate rise. As far as how much or if the percentage of it, you sort of think it's about 50-50. It's only going to be a small one if it does happen.
Yeah.
As far as cuts are concerned, your tip is we're possibly a year away from that if it happens.
I think we're looking at the back end of, second half of 2024.
Not 2023.
Not 2023. I think we're probably looking at then. Mate, we can all be hopeful they come down sooner than that. With how rapidly they raise them, and how mate, you tell me when you go down to the cafe, what cafe do you find that's quiet, mate? Everywhere's still pumping it. People are still out there willing to spend money. When that changes and people are feeling it a bit more, that's like, that's when things are getting curved a bit further.
And I think hopeful is the word, because hopeful feels nice, but no one has a good investing strategy that's built around hope.
No.
Sam Gordon from Australian Property Scout. Thank you so much for jumping on the show again, mate. It's always a pleasure.
Pleasure as always, mate. Thank you.